What on earth is that? That is the new closing disclosure for the buyer. It's 6 pages long. I'm going to go over it with you, and you're going to have an understanding of how it works. So let's get moving here. So here at the top, you have the closing information, the date issued. We do not have this filled in because this was issued by the lender, but just so you're aware, it went out today. We have the closing date, the disbursement date. Our name is the title company. Did black out of private and personal information. Sales price is $169,950. Moving over, up here at the top where it says transaction information. This is where you're going to find the borrower's name and address, seller's name and address, the lender's name as well. And then over here at the top of page 1, now keep in mind this is just the buyer's closing disclosure. You have the loan information, the length of the loan in years. Is this a refinance or purchase? This is a purchase. What type of loan product is it? This is a conventional loan. If it's a VA, FHA loan, you would have it listed down here. Then they have the loan ID number. There is mortgage insurance on this, so you have the mortgage insurance number there as well. Scrolling back, the very next thing you see are the loan terms. You have the loan amount. How much is this person borrowing to buy this property? They're borrowing $161,452. Can this amount increase after closing? No, it cannot. What's the interest rate? It is 3.875%. So they're borrowing $161,452 at 3.875%. This is a fixed rate loan. It is not an adjustable loan. Principal and interest on this payment is $759.21. Again, since this is not an adjustable rate, this principal and interest here will never change. And again, there is no prepayment penalty on this loan. There's not a balloon payment on this loan. For those that are new to real estate, you don't see a balloon payment that often. You don't see prepayment penalties that often either. But a balloon payment would be if you made payments throughout the life of the loan, but then at the end of the term, there's still a large lump sum or a balloon owed at the end of the loan. You don't see these too often. You ran into these more often in about 2005 or so, and the mortgage market was a little bit more wild than it is today. Now, how do your payments work? How do you project your payments? So, you know you're borrowing that amount there. Your monthly principal and interest of $759.21 is right there. Now, there, like I said earlier, there's mortgage insurance of $72.65 a month. Their estimated escrows, and keep in mind with escrows, your taxes and insurance, they can certainly increase over time, so they do tell you that. But initially, it's going to be $177.11. So their total monthly payment is going to be $1,008.97. Now, because there's mortgage insurance on this property, and it is a conventional loan, the mortgage insurance will eventually fall off. They predict it will fall off within the 10-year period. So over here, we have the remaining loan balance of $759.21, and you have the escrows of $177.11. So from years 10 through years 30, they're predicting that your total monthly payment will be $936.32. as opposed to the initial charge there. That said, let's be 100% honest. We live in Western Pennsylvania. Your taxes are going to be going up at some point. There's just no way around it. That's just how it works. Now going down further. So what are you paying in escrows again? You're paying $177.11 a month. So you find it there. You also find it there. And what does that cover? That covers your property taxes and your homeowner's insurance. Now, so what are your total closing costs? There's $6,670.28, and that includes $3,010 in loan costs and $3,660.28 in other costs. See page 2 for details. We'll go over that. What do you need to close? This is the big one. This is what buyers always want to know. How much do I need to bring to closing? You'll find that in the very last line there. Cash to close. This instance, we have this amount right there. It includes all the closing costs as well. So that's page 1. Now we'll go and look at page 2. Turning it over here. Now this looks more familiar to what you're used to seeing with the settlement statement. Here we have at the very top your loan costs. In this instance, we have a processing fee and underwriting fee. Those are indexed right over there. You have the gross amount due of $11.25. Go further down, you have an appraisal fee on this. That was $400. And then down below here, you have our title charges as well. So anything that we would charge to the buyer, most of the time, depending on the lender, you'll find it under Section C for services that the borrower shopped for. Though certain lenders, we will be up here in the B group as well. So that said, you have our fees. So you have our closed protection letter, which is always going to be $125. You have the lender's title insurance policy of $12.10. And then you have our endorsements here as well. There are 3 endorsements. They came to $150. We charge any additional fees to the buyer. You will also find them under this section right here. So the total then is $14.85 for our fees, $400 for the appraisal, total borrower paid closing costs of $11.25. Add these up together, you have $3,010, which were your total loan costs. To get the loan, it was $3,010. Now there are additional charges going down further. You have the recording fees and the transfer taxes under the other costs. It's under Section E, taxes and other government fees. The recording fees, this is Butler County. It's much cheaper. It's $164 total for the deed and the mortgage. And then you have the buyer's half of the transfer taxes for the property as well. Going down further, they have a homeowner's insurance charge. That was $550.49. Like all loans, you have to pay for your interest up through the end of the month. $17.14 a day up through the end of the month is $359.94. Keep in mind, you see they sum up each section here too as well. And then you also have the initial deposit in your escrow account. Now here's where it's a little bit different, other charges. So your commission fees, you'll find those down here, but you won't see them on the buyer's side unless your seller's paying the commission. Because like I said, they like to keep everything separate. So the seller will see that, and we'll go over it with you certainly, but you'll have that on a different sheet of paper, your commissions. Deed preparation fee, we don't see that either. Those are, why? Because those are all fees that we charge to the seller. But you do have an administrative fee for the buyer, and that's right there. And then going down further, your title insurance premium that protects the owner of the property, and that is optional. Though if you don't get it, I think you're incredibly foolhardy because you have no protection whatsoever if you do not get that. But that's $60 in this transaction here. And so the total of this entire column is $3,660.28. You add that to the $3,010, and you get the whole bottom line then right there of your total closing cost to close. Let's turn to page 3. Here at the top, this is very similar to what you saw earlier. You have your loan estimate. These are the fees which were originally quoted to the buyer. So you have the loan estimated charges, and then you have the final costs. The final costs were much lower than the loan estimate. That's a good thing. That's not a problem right there. Down payment, what the buyer would be expected to bring, is right there. What they put down in hand money, and there was a seller assist. I'll go over that here shortly. So going down further, we have the total due from the buyer, including, so that would be the sales price, plus the closing costs, plus the tax prorations. So all of those come to $177,424.41. So they're still adding this up, but they're doing it backwards. So before you'd see all these fees here and you'd see the total down below there. Now you're seeing the total right up here at the top. The same with items already paid on your behalf. You have the total up there, but then down below here they have the breakdown, whereas before you'd add these all up and they'd have the sum at the bottom. So you have the deposit, the loan amount, and the seller's credit as well. So again, total cash to close from the borrower is the difference between the two, $8873.91. If you look over here on the seller's side, On this document, it's going to be blank because, like I said, there is a combined form, but we're not going to be doing that. We're not going to be giving those out. We're just going to be showing them separately because the seller's information is the seller's information and the buyer's information is their information. There's really no need going forward for the buyer to know for the seller to know what the buyer's interest rates were and how much they paid for a loan. Now going over here, additional information on this loan. This is a little bit more in depth. Assumption, can this loan be assumed? This is just a conventional loan. You're not going to see assumptions except for on certain types of loans, and even then there's often a fee involved. You don't see assumptions too often, though. We may see them going forward, but that's for another topic and another time. This loan does not have a demand feature. If there's a late payment, is there a penalty? Yes, there is, and in fact that needed to be filled in there, so we should have had a 15-day grace period. As long as with the late fee, it would be 5% of the loan amount. It does not have a negative amortization feature. What that means is, if you make your payments on time, you can never owe more money than you do when you first have the loan. You almost never see a negative amortization. I truly cannot tell you if I've ever seen one myself in the tens of thousands of loans I've closed in the last 20 years. I may have seen one, but if I did, I absolutely do not remember it. Partial payments. Lender does not take any partial payments on this loan. Now, some of them will, some of them will not. Your security interest in the property. That means, if you don't make your payments, you run into an issue there for certain. There is an escrow account on the loan. You have the escrow property costs, the initial escrow payment, monthly escrow payment down below there. If you had no escrow, it would be down here. And if there's an additional fee the lender charges you for waiving the escrow, you'd find that there. And once again, they just tell you, hey, your taxes can go up. Shockingly, though people always do seem surprised by that. And because of that, your monthly payment may increase as well. And then finally, we have the last page, page 6. Now this page here at the top, we have the total of payments. So this replaces the TIL, or the Truth in Lending Disclosure. So if you never make any prepayments over the life of this loan, you take all 30 years to pay it back, that's what you'd be paying back there. You have the finance charges, the amount financed, APR, and again, that is not the interest rate. And this is a new box, I should say, total interest percentage. The total amount of interest you will pay over the loan term as a percentage of your loan amount. So you have that right there. That is really going to blow people's minds when interest rates start to really increase. But for right now, just let it run. Like I said, it's going to be new and interesting, but it'll be fine going forward. That said, if the property is appraised for your loan, the lender is required to get you a copy of it. These are just basic laws. State law does not protect you from liability for the unpaid balance. So that means if they foreclose on you, they could technically go after you for a portion of the loan proceeds, though you do not see that. And there's actually a little bit of a grace built in there too as well. Refinancing. Refinancing this loan will depend on your future financial situation. There's no guarantee that you'll ever be able to refinance this. And they don't guarantee any tax deductions either. Go see an accountant. That said, the final portion of this is they have the contact information. So here you have the lender's name, the address of the lender, their ID numbers, the lender's contact, their license ID number, their email information and phone number. If there's a mortgage broker, you will find all that information here. And then you have the same information for the agent for the buyer. And you also have to have the brokerage ID number and the brokerage's address. And for the seller. And then you have my company's information. So you have the Pennsylvania land titles. Here's the settlement agent. You have our address. Here's our state ID number. I will be doing this transaction. You have my license ID number. Closings of PA land titles is our contact email address. And you have our contact phone number there as well. So that's the buyer's closing disclosure. It's a little bit different. And I will be very happy to go over this with everyone in person as well. If you have any questions about it, you're more than welcome to call me and I'll go over it with you line by line. But next we'll go over the seller's disclosure. Thank you.